This is going to be a bit of a rant, so yeah, forgive me in advance if you don't really want to hear me complain. But I read an article last night about a house in Sydney that sold for $1.5 million. So I'll link to the article in the description. And for those of you watching from outside Australia, I'll try and give a brief overview of how the housing market in Australia has been, particularly in Sydney and Melbourne, where house prices have only really experienced a small decline in the past few years. Uh, we haven't really had a big crash like most people had been expecting, and I think a lot of that has to do with cashed up overseas investors, particularly from Asia, just looking for somewhere to park their cash. And then add to that, we have negative gearing, where property investors can claim rental losses against their income as a way of reducing the amount of tax they pay. And add to that, our central bank, the Reserve Bank of Australia, has been cutting interest rates pretty steadily over the past few months, trying to prop up the housing market. And we're now at historic lows in the official interest rate of 2.5%. And the good old mainstream media are trying to talk down the idea that Australian housing is in a bubble. So that's just a bit of a background. Um, I'll let you have a look at these lovely gold coins while I talk a bit more. So from reading the article, it made me think about how many ounces of gold will actually buy you a house in Sydney, and really start to think about what fair value for gold and what fair value for a house should actually be. So this particular article is about a house that has been owned by the same family since 1905, and it only just recently sold for £1.5 million. Back in 1905, it cost £80. So the title of the article is From £80 to 15 million. And of course, the mainstream media loves these kind of stories. They'll show a happy family making millions in property, trying to show everyone that property is the road to riches, and you better get the biggest loan you can afford and put it all into a house, because just look at the past performance. Houses double in value every 7 years, and look, you can even turn £80 into £1.5 million. And typical of our mainstream media, they also like to mix in a bit of xenophobia, where they show a cashed up buyer from Asia pushing out the locals in the property market, outbidding everybody and buying up everything in Australia. And of course, no article about property is complete without a picture of a smug real estate agent who's going to pocket a fat commission from the sale. So anyway, that's the end of my rant. I just did a quick calculation then, from these figures comparing gold and property. So in 1905, an ounce of gold was US dollars $20.67 per ounce. So convert that to pounds, would have been £4 3 shillings, or 4.15 pounds. So an £80 house would be equivalent to roughly 20 ounces of gold. Now, it sold for 1.5 mil in 2013, and let's just say the Aussie dollar gold price is 1400. 1.5 mil divided by 1400 is approximately 1072 ounces of gold. So if these two asset classes were to be drawn level, how much should an ounce of gold be if you keep the same ratio of 20 ounces to a house? 1.5 mil divided by 20 ounces is $75,000 an ounce. Now, the alternative scenario is if housing were to decrease in value to match that same ratio. How much would a house be worth in dollar terms? Well, 20 ounces times $1,400 gives you $28,000 for a house. So I'll leave you with a couple of things to ponder. Which of these two scenarios will likely play out? Gold rising or property declining? And what should the fair value of an ounce of gold or a house be given these calculations that we've just explored? I don't really know the answer to all of these, but also like to say I'm not one of these to the moon type of guys when it comes to precious metals. But yeah, just got me thinking, how long can this lopsided trend in the rise of property values actually continue? And how long can the price of gold remain this low when compared to property? And is the correction going to be a rise in gold or a fall in property? And I haven't even considered silver yet, so the gold to silver ratio is somewhere around 60-1. Back then it was, I dare say, much smaller than that. So anyway, just a bit of a rant on my part, and some questions for all of us to consider. Yeah, let me know what you think.